Good morning, and thank you for joining this presentation. I'm Dell Duncan, Vice President of Commercial Lending at First Federal of Lakewood. We're a community bank. We have a branch in Chagrin Falls, and I'm a Chagrin Falls resident. Today, I'm going to provide just a high-level presentation of several initiatives that either offer lower interest rates or lower fees, tax credits, and literally free money for small businesses. So due to the COVID-19 pandemic, Congress has passed actually three initiatives, two more recently over the last several months. And principally, these are offered through the Small Business Administration. These programs offer significant savings and better financing options for small businesses, at least through this year. There's also a tax credit which is available for employers who retain employees. These programs are new and they're evolving. They continue to change. The SBA is providing interpretations, and as issues develop, they will, in my view, they're coming out with more flexibility and trying to be more eligible for businesses. So for the most part, I believe this is all current and accurate, but you want to discuss participation with your banker and or your tax accountant. So with that disclaimer, let's get started. So let's go to slide 2. So the four initiatives I'm going to talk about are Small Business Administration loans, Paycheck Protection Program, the Employer Retention Credit, and the Economic Injury Disaster Loan Program. So let's go to the next slide. The SBA has offered a number of initiatives. Both programs, and there are two SBA programs. The 7A program is the principal one, and that offers a guarantee to lenders, a percentage of the loan. The 504 program is actually direct funding from the SBA, is basically using their credit quality to allow a small business access to the bond market, much as large publicly traded companies have. So the initiatives in summary, the SBA will actually make your first 3 months of loan payments. I think it's up to $9,000 a month. The SBA is providing lenders a higher guarantee on the 7A loans, and they're waiving about 2% of fees on the 504 loan program. The new program also allows 504 loans to refinance existing 7A loans. Let me explain. The 7A loans tend to be variable rate loans, and those rates today are probably at least 5, maybe as high as 6%. So you have the ability as a small business, potentially, if the eligibility requirements are met, to refinance that loan through a bond with the SBA. And the rate, 25-year fixed rate in March was only 3.05%. So, literally can be almost a 50% savings. On the 7A program, the SBA typically will have a fee of 3 to 3.5% on loans. That's on the guaranteed portion, and they're waiving that fee entirely at this juncture, at least through the end of September, probably through the end of the year. There's a certain dollar amount allocated, and they estimate how long that funding will last. Historically, over the last year, as funding has run out on these programs, maybe not immediately, but soon after it runs out, Congress has appropriated more money, not guaranteed, but at least through September, if not the end of the year. This fee waiver will be in place. So, for a $500,000 loan, the fee had been about $11,000, and that's now zero. For the 504 program, the SBA is waiving about 2% of the fees. And these tend to be larger loans because often it's for fixed assets or real estate. So the savings can actually be even more significant than that. So again, with the 504 program, you can finance fixed assets, owner-occupied commercial real estate. It's a two loan program. The SBA funds 30 to 40% of the amount in the second mortgage, and the lender funds in a first mortgage on a conventional basis. So the lender gets usually a 50% or 60% loan to value, which is very acceptable to them. And again, for the borrower, the ability to have access to the bond market and a 25-year fixed rate is pretty important. Also, the SBA programs, both of them, typically come with a lower down payment. On a conventional loan, whether it's for real estate or fixed assets or working capital, often a 2% or 20% down payment is required. And if you have an established business, you may be able to refinance either real estate or fixed assets with no money down. And if not, 10% or 15% is probably the maximum. So having to dole out less money to get the loan, also some value for a business when cash can be pretty tight.
I have one question, Dell.
Yes.
I'm sorry if I missed it, the difference between the 7A and 504,
Mm-hmm.
who applies for those?
Both are small business administration loans. They're different programs. So there are eligibility requirements and there's size standards. A very rough rule of thumb is if you have less than 300 employees, that usually qualifies you as a small business. And that size standard, it's slightly different for the 504 loans, but 300 or less employees encompasses a pretty high percentage of businesses. And again, to drill down, they use codes based on industries, and you can either qualify based on number of employees or your revenue or net income level. So I don't remember the exact percentage, but it's in a high 70%, I believe, maybe even higher, of businesses in the country that qualify as small businesses.
Okay, thank you.
Yeah. All right. So just to summarize on the SBA side, the second round provides material cost savings to borrowers and less exposure to lenders. And the attitude, the strategy is that it should spur some important funding for commercial real estate loans. For a lender, the ability to have what is now a 90% guarantee on the 7A loans will make it a little bit easier to maybe fund a startup or a business that has had a rough year. The old typical guarantee percentage is 75%. So you don't make a loan as a lender just because you have a high percentage guarantee, but with that guarantee, it does allow you to take a little bit more risk. In many instances now, with the fee waiver and a higher guarantee percentage for SBA loans, it really takes away some of the issues that businesses may have using the SBA program. And one thing to keep in mind is with SBA loans, you have a commitment for the full term. Typically on a conventional loan, you may have a 5-year or maybe a 10-year term, and at least the interest rate is adjusted, and often there's a maturity. And if that maturity happens to be in 2020, banks can be very hesitant to renew the loan. When you have an SBA loan and it's for 10 years or 25 years, you have a commitment for the full 25 years, and there's some value in that beyond just the 25-year fixed rate. Are there any other questions on the SBA side? Okay, let's go to the next slide then, the Paycheck Protection Program. This has been out for just coming up on a year now, so I think most business owners are pretty familiar with it. So I'm just going to summarize a few things. If you had a PPP loan from the first round, you can apply for the second round. There's plenty of money available. I talked about allocation. They estimated the program would run out of money at the end of March. And a couple of weeks ago, they extended the period to May 31st. So you have until May 31st to apply. In order to be eligible, if you've used the program on what you'd call a first draw, you must have used or plan to use the full amount for that first loan and demonstrate at least a 25% reduction in gross receipts between either comparable quarters or annual 2019 versus 2020. If a business has not applied before, it's called a first draw. To be eligible, again, usually it's 300 or fewer employees, meets the SBA size standards to be defined as a small business. There's particular industries where it can be a little bit higher than that. There is no 25% reduction in revenue requirement if this is the first time that you're applying. And I mentioned that to a few businesses who were under the impression that even though they didn't get money the first round, that they needed to show that reduction, and you do not. Okay. This second round was focused more on small businesses, and it also expanded the types of businesses that were eligible to apply. Initially, and you probably read in the media, there were some pretty large businesses that ended up getting money because they were franchises and applied more as a franchisee than the size business they actually were. There was actually about a 2-week time frame where banks only could process loans of with businesses, I think it was 20 or fewer employees. So the focus was definitely on truly small businesses. And there were some expanded ability to apply, like housing cooperatives and certain 501c6 organizations. I'm on the board of Better Business Bureau. They were not eligible the first round, but they are eligible now. And remember that sole proprietorships, independent contractors, self-employed individuals are also eligible for this program. So, this is actually a grant. The loan is forgiven when certain criteria are met, basically that you spend the money essentially on payroll, although there's some other eligible expenses that you can that you can work through. They have evolved these eligibility issues as well. So, make sure you're talking with your tax accountant and allow them to assist you, especially if you're using some of the other governmental programs. You can also access the SBA website for more information, and I provided that on the PowerPoint presentation.
And Dell, with this second draw, when can you start applying for the forgiveness?
For the second draw?
Yes.
Well, first you have to have the money used. And my understanding is that there's a backlog, if you will, on loan forgiveness for the first round. So my guess is that you probably want to wait a while if you have used all that money. I don't know that there's a requirement that a second draw loan not apply for forgiveness, but I do know that as an organization, I know we're still working through some forgiveness on first draw. And again, this is a brand new program that has never been around before. Typically, the SBA takes about 6 months to get information out, get feedback, and so on. And this one was just thrown out there, and it's been a challenge sometimes for the SBA and lenders to make sure that we're doing what was intended with the legislation, which was, I'm told, 600 or so pages of narrative. So you need to apply to your bank for a Paycheck Protection program. I've been told that some banks are not accepting any more applications. First Federal is still processing them for customers. You're welcome to be a customer. We would accept the application, but we need to have your business start banking with us as well.
And I know that Dell doesn't want to do a big sell on First Federal Lakewood, but I do want to do a personal shout out on behalf of the Chagrin Chamber. They've worked through the draws for us. It was smooth. It was great. They helped some local businesses in Chagrin Falls that weren't clients of theirs. And we encouraged that those businesses to go over to First Federal when they were being denied by their big bank at the beginning for the first draw. And, I got to single-handedly see First Federal truly be community and truly save some local businesses in Chagrin Falls. So I have to give a shout out to First Federal. We didn't move our money. We have our money at First Federal Lakewood. But I can't say enough about how they really supported the small local businesses in the valley. So,
thank you, Molly. There is a difference. Sometimes I think that community banks and the large banks are two separate industries, but we are the same. But size does make a difference. And I worked through processing the Paycheck Protection applications. They can be very time consuming, and I can appreciate a $1 trillion bank not wanting to spend a lot of time on a $5,000 Paycheck Protection loan, but these are essential to businesses, especially that small. So let's move on to the employer retention credit. This is far less known, and it's something that you really, the banker is not involved in this. You really need to work with your tax accountant. But essentially, eligible employers, and again, generally it's that small business size standard. Eligible employers can claim a refundable payroll tax credit against the employee share. It's up to 70% of the employee's wages, which would not exceed $10,000 a quarter. Or maybe said another way, it would provide that 70% tax credit for employees earning $40,000 a year or less. If it's higher, if you're higher than that wage-wise, the credit is not quite as high a percentage. But this is not a loan; it's a tax credit. It doesn't have to be repaid. The difference with this is that there are issues, obviously, because it's a tax credit, that your tax accountant needs to be advised of. And I found kind of a mixed bag with accounting firms. So the larger firms, mid-sized firms, are familiar with this program, but some of the smaller firms, not as much. If you find that your accountant does not have information or is not knowledgeable, let me know. I have a contact that works with a consulting firm that steps businesses through from A to Z. So, you're eligible as long as you're still in operation and you had either a full or partial suspension of their operation during basically starting last March, essentially. And you do need a decline in gross receipts. But again, if the business had either a full or partial suspension, that's very likely to have occurred. Again, with this, there's an IRS website that I've noted on the PowerPoint presentation that I would steer you through. But first and foremost, you want to talk with your tax accountant. Okay. Any questions on the employer retention credit?
And are these three different loans or grants? Is it either or? Can you apply for all? Can you apply for some?
You can apply for the employer retention credit, and let me double check, because this is one that has been evolving as well. I think pretty sure you're able to apply for this tax credit, but it may be reduced by the Paycheck Protection loan amount. No, I'm sorry, that's for the EDO program. It's separate because it's not a loan, it's a tax credit. It's really something more through IRS. So my understanding is that you can apply for this even if you have a Paycheck Protection loan or an economic injury disaster loan. If you're accessing information online, my suggestion is make sure that it's current. I mean, at least 2021 information, because as I said, the first stimulus package that was passed, I think February of 2020, had a lot of interpretations. Some were changed, some significantly in the second and third stimulus packages that were passed. So with this especially, talk with your tax accountant. I mean, the good news is it's an above the line tax credit. So essentially, even if you're making money, it's an expense that comes off your top line. Okay. Lastly is the Economic Injury Disaster Loan Program, or EDL. This provides economic aid to businesses that are experiencing either a temporary loss of revenue due to COVID-19. This was actually the very first COVID-related initiative that was rolled out, because the SBA has had this Economic Injury Disaster Loan Program for many years. Typically, it's utilized in an area hit by maybe a flood or a hurricane. This is the first time the entire country has been considered economically injured, but it's a valid interpretation of what's going on. So you can use this loan for working capital, normal operating expenses, continuation of healthcare, paying rent, utilities, and so on. So the use of funds is broader than the Paycheck Protection program. The term actually can be up to 30 years. There's no prepayment penalty. The interest rate for for-profit businesses is 3.75%, again, fixed for up to 30 years. For Loans over $25,000, the SBA will put a lien on the business assets. That's done more for convenience purposes. It's likely that a bank will have a superior lien, but the SBA will put a lien on the business assets, a subordinate lien typically. So again, eligibility is similarly qualified small businesses. You are able to apply for both an economic injury disaster loan and a paycheck protection loan, but the funds from both can't be used for the same purpose. So essentially, you can use the PPP proceeds for your payroll. You could use the EIDL loan for other operating purposes. Okay. The amount that's available has been increased, and this was just recent. The presentation shows $500,000. I've also seen $150,000, but either way, it's a pretty significant amount of money for a small business. And as of April 6th, the amount is supposedly being raised to $500,000, and they increased the period of economic injury from 6 months to 24 months. So that would obviously increase the potential amount that you can apply for. And understand, this is actually a direct loan with the SBA. So banks are not involved at all with this loan. You apply directly with SBA. If businesses have an EIDL loan, the SBA, in theory, is going to contact the business to let them know that they might be eligible for some additional funding. Again, that's what we've been told, but I'm also aware that in the real world, the SBA is really stressed with resources. These programs, because they're not permanent, you don't necessarily staff for them. So it's been a bit of a struggle for SBA to keep up with everything that has gone on. The government appropriates money, but usually not for more employees for SBA. So, to summarize, virtually all businesses have been impacted to some degree by the pandemic, and smaller businesses don't really have the resources to weather what's now going into a second year of economic distress. The federal government, principally through the SBA, has really an unprecedented number of initiatives to keep small businesses afloat. And I thought it was valuable to make you aware of these programs. Your banker should be able and willing to assist you with PPP loans and the expanded SBA capabilities. These programs can literally make the difference in the survival of your business. Yeah, I've worked through the backside of processing probably over 50 Paycheck Protection loans, and I've seen the financial impact that this pandemic has had on small businesses. If you find that your bank is not responsive and critical at this juncture, it may be time to evaluate whether you have the relationship you deserve and need to help you through this difficult time. We hope that we're on the upswing with the economy, but there's certainly no guarantee of that. And I'm pleased to be able to share this information with you, and hope it can help your small businesses. So thanks for your attention.
Thank you.
Awesome, Dell. Thank you, First Federal Lakewood and Dell Duncan. If you want to get a hold of Dell, could you just remind everybody what the number there is?
Yeah, my cell number, which is the best way to get a hold of me, is 216-225-1666. And on the front page of the PowerPoint presentation, it has my contact information, which includes my email address. So feel free to reach out to me. I'll try to assist you, and if possible.
And not to say it again, but I will. I loved how you said, go to the bank that's going to take care of you. You give them your money, and you deserve a certain level. And I do want to say, I know that the number one thing, and I apologize for the construction in my house. The number one thing that people are always freaking out about changing banks is all the the time it's going to take to actually move your money, and you've got all those automatic withdrawals and deposits that have to be changed. It's not as scary as you think. That's all I'll say. It's not as.
We try to make it as easy as possible.
Yeah, and you should be, somewhere that they know your name and they're taking care of you and your money. So, well, great. Well, thank you so much.